Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. This is our forex-technical-analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. Before we pull up our video, we always want to start off our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As we said, this is our forex-technical-analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. In each video, we look at the prior session's price action to come up with key support and resistance price levels. We'll review the gold chart to come up with leading sentiment. We'll try to create a low volatility and inside bar watch list, and we have an education spotlight at the end. Please send your feedback and comments to contact@dmbfx.com, and let's head to the charts. As we look at the week that was in Forex, we start off with QE or not to QE. And for all of this year, we've been saying that the expectation for quantitative easing has been small because of the good job numbers. However, on Friday, we had the disappointing job figures, which have brought up the speculation for more stimulus back into focus. So let's pause for a quick second and take a look at that jobs number. So we're going to do things a little bit different this week. We're going to jump right in here to the non-farm payroll numbers. Yes, they released Friday, and we know the market was closed. But I think this is really going to be something that we're going to have to watch going into next week. So I'm really kind of focusing here. So when we think about what people were expecting, you have to think about what's happened here in 2012. You can see up here in February we had 227,000. January we had 223,000. I'm sorry, I said that backwards. January was 227, January was 284,000, and in December it was 223,000. So there's this 200,000 bar that has been set for the market. And of course, we know that the unemployment rate has gone down each time also. And yes, politically correct. We know that a lot of that is people not looking at all anymore than it is people actually being employed. And I'll scroll here. You can see here is that unemployment rate scrolling down just a little bit here. And of course, the chart that nobody, certain segments of the population doesn't want to admit, and that is there's where he became president, and there's our jobs number. As you guys know, I keep politics out of it, so I will continue to do so. So as we get into what actually happened, and we see the consensus was, somewhere in the 200,000, and the actual number was $120,000. And so now you see why I'm really kind of focused in here on this number. Yes, unemployment did fall from 8.3 down to 8.2, but the big thing here is going to be this miss. Consensus of around 200,000, and we came in at 120,000. Why is that important? Well, let's go to the charts and take a look. Okay, so we got up a futures chart, the ES, for Friday. Yes, the market was closed. One thing to notice is if you, as a great trading advice, you know how important I think it is to identify support and resistance. So if you would have saw this resistance around 1392 and would have had a breakout trade, you would have done really well. That's a side note. What's important is, all right, so here's 4 o'clock, 6 o'clock. What time does non-farm payroll come out? 8:30. There's 8 o'clock, 8 o'clock. Oh, look at this big red candle here. 8:30. So we went from 1392 to all the way down to 1372 at one point in time. So that is a 20-point drop there. Now again, market was closed. All the market participants were not there. But it does give you a small gauge into the interpretation of the miss. Consensus 200,000. The market came in at 120,000. How did the market think about that? Anybody that was around, the computers that were around, we've got a 20-point drop. All right, so we're going to come on back to our analysis of the week of Forex. And again, not only do we have those questions in here in the States, but also the Bank of Japan is under pressure to ease. They're going to announce their monetary policy on Tuesday. And they're getting ready to have threats of deflation, and so politicians are looking for more easing there. No more support from the ECB. The President, Draghi, painted a fairly bleak picture for the Eurozone. And remember that the Eurozone fell into the first quarter of recession here in the fourth quarter. So there's questions about more easing in the Eurozone and in the UK. But again, we're seeing no more support from the ECB. And again, look at the, as I was just saying, the UK. The UK contracted in the fourth quarter of last year. And so there's some calls for quantitative easing in the UK also. So all kinds of countries, politicians want their national banks to print some money. We'll see what happens, and that's probably going to be the forefront going on this week. Now let's take a look at some of our market sentiment leaders. Here we're looking at the dollar and weak market, and we can see our dollar starting to strengthen. And remember, the FOMC said we're probably not going to be doing any more quantitative easing. That's good for the dollar, and we can see that we did hold up. Last week we talked about would this 79 hold up as support, and in fact it did. We're coming back up. Will we break this past swing high? That remains to be seen. Point of control just above 79. So dollars range bound between 79 and 81, but we'll see what happens. So if the dollar is getting a little bit better, what does that mean to gold? Gold pulling back a little bit here. Almost coming back down here to 1600. We broke through to 1660. We're trying to hold up here at that 1600 price level. You know, one thing that's interesting is that, you know, we don't really see those commercials anymore about, you know, buying gold. You don't see them as much, although maybe I'm just not watching the right channels. Partly because some of those companies have been investigated for false advertising. But, you know, gold has definitely not been the beast. I'm certainly saying a high price, but it's not been the bullish beast that it was in 2011. And finally, we'll go to crude oil for our pocketbooks and oil. And we, you know, Lon spoke about this 96 to 102. We finally broke out of that here in 2012. And now we're coming back, and the 102, what was once resistance, is now holding up as support. So let's start off with the euro dollar. Of course, some of that economic data has been weak over the past couple weeks. Again, with that fourth quarter reading of negative GDP, we're starting to see a little bit of weakness. Now, what's important is where are we? You know, you can see for the past several months here, 2012, we have found support here in this 1.305 price level. And here on Thursday, or Friday, I'm sorry, we did find a little support here. And so will the market hold, or are we going to fall? Now, you see, if we fall, we have potential to come all the way back here to the January lows. So we definitely need the buyers to continue to find value here. And you can see that we've really been in this range of 1.305 up to the 200 moving average of 1.347 for much of 2012. So will the buyers continue to find value here? We're about to find out. On the wire time frame, we are in a buy zone, and we just peeked our head right above the little resistance line that we've been watching. We're below a long-term moving average. We're in the buy zone, so we'll see if the buyers come tomorrow or come today. Will hold up the euro dollar. The pound dollar, kind of an opposite little story here. You can see I got a little line happy here as I was working with a couple of clients. But the one thing you can see is that we are continuing to stay above the 200 moving average. That's important. But we do have some room to go before we get to these 2012 lows, or more importantly, the January 2000 lows. So the pound dollar has some support areas to hold us up, where the euro dollar potentially has room to go lower. They both have room to go lower, but the pound dollar is a little bit better. Here we are also in the buy zone, and we are above the long-term moving average. I think we will see if these moving averages and the previous swing lows will hold up as support as the market, again, the UK in its fourth quarter negative GDP numbers. So we have the ECB talking about the likelihood of not supporting more easing. We have the UK and the pound going into, or potentially going into recession. And although the dollar is stronger, but we saw that negative jobs number that may bring about quantitative easing. So it's going to be real interesting to see where these currency goes. We'll finish off here with the dollar franc. And we can see that the 200 moving average popped up. It did provide a little support here. And now we're back in this range of 0.908 to about 928. So we'll see. We're in the middle of that range. So we'll see where we go from there. We are in a sell zone. So that might, if we break through Thursday's candle here, we may come back and retest the moving average and low. But right now we're in the middle, and we'll let the market tell us which way it wants to go. As we look at today's watch list, we're first starting off with our low volatility watch list, which is our 1 hour time frames using Bollinger Bands, looking for that consolidation, looking for that pinching, and hopefully catching a break in the direction of the trend. For that, we'll be looking at the dollar Canadian. The inside bar watch list is where we're looking at the range of the day and comparing it to the previous day. And if it's inside, we look at that as an indecision and consolidation day also. And then again, we're looking for that break, preferably in the direction of the trend. We have several here. We're looking at the euro dollar, the pound dollar, the dollar franc, and the dollar Canadian. As we come to our education spotlight, we're kind of putting a exclamation mark on our discussion about trading plans. Of course, we're going to talk about it more and talk more about the psychology of trading. But we really went through the whole process of creating a trading plan. If you've been with us long enough, at the end of these videos, we've been talking about this for a year. Haven't decided what book we're going to use next. I'm looking at, we've done Trading in the Zone, we've done Trade Away to Financial Freedom, looking at a couple other ones. But in the end, we have to understand that part of being a trader is acquiring those intellectual skills, setting up your criteria, learning those technical skills, and making sure that you're disciplined to follow those. If it was as simple as identifying a strategy, identifying an indicator, and go, everybody would be rich. I was talking with a client just this Thursday about that. But what differentiates winning and losing traders is that inner struggle with your emotions, your inner struggle with wins and losses. Yes, people struggle with wins too. It's that inner struggle with taking profit immediately or staying in for the long haul, which I've struggled with in the past. So that's what separates winning and losing traders. It's not the strategy, it's not the indicator. It's the discipline and the focus of the trader to implement that system effectively. In other words, it's the trader's mindset that will separate you from being a winning or a losing trader. And that's what we're all about here. We might help you develop that trader's mindset. Please take the time to comment, like, subscribe below. Let us know what you think. You know about our resources. Again, through our coaching, we will help you develop that trader's mindset, to have that focus and that discipline. And even if you develop that, you may decide that it's best to have someone else expertise work for you. So our managed Forex accounts are definitely there for you. Leading Forex brokers, full transparency, individualized trading plans. And if you're looking to get signals, we have something for you there too. In the end, as we said, the important thing is developing a trader's mindset. And that's what we do at Move with Mike. Thanks, guys, and I'll see you next time.